Ladies and gentlemen, it is cold in New York City, but my heart is warm because the gang is back, because we need to figure out what is going on in this bull market that everybody in the universe seems to hate. So how is everybody doing today?
Doing great. Living the life.
Yep. Doing great. Also doing great over here.
We got Billy Bob and Scoop C in the chat. JR, how are you doing?
I'm living the dream, buddy.
Everybody's living the dream, of course. Positive energy. People stop reading the news. You need to stay in here because we're going to talk about actually why people are so miserable. Because yes, this is a hated bull market. So, and you can see our sad little bear who's getting destroyed. Okay, so I want to bring up like two graphics. The first thing is, according to AAII, bearishness is at 16-month highs. And, you know, Sammy and I were discussing offline. It feels like the market hasn't been doing well, but right before we came on, the SPY hits record highs. So we need to know what is going on. So, of course, I'm going to start with my oldest friend here, Sammy. Like, what do you make of this? Is this just as simple as more buyers than sellers, which is my explanation for everything?
I don't know. I think a couple of things. Why does it feel like the market is bearish when it's at all-time high? It's because probably of the IWM. The small cap stocks continue to suffer, continue to be weak. The IWM has been consolidating in the lower part of its range for the last how many months now? I mean, for the last couple of months at least. That's number one. Number two, while the market is bullish, it's probably mostly the big names that are bullish. The rest of the names, and they're not that bullish, I think. I don't know. But it does feel, you're 100% correct. It does feel like we're not in a very bullish market when the SPY and the Qs are at all-time high. Okay, the other part, what's the other question, Mike?
I think that was it. I think it was just like, what do you make of this mess? So Derek, will move on to you. And Billy Bob in the chat, these comments are completely inappropriate. This is a family show. We cannot have comments like this on the screen, so please stop this. It's utter madness. Okay, Derek, on to you. What do you think?
I can't grow a full beard. I'm still waiting on that part of puberty off that person's comment. I can't grow hair on my cheeks. I only get this bit here, and when I'm in New York, I cut it off because New York is a different world than Idaho, which is where I am currently, where I feel like you got to fit in a little bit. So you should see me when I throw my cowboy hat on and I start wrestling some cattle out here. It's a real trip. Anyway, talking about markets. So, the IWM hasn't really been participating, so that's probably part of it. It's also some of these Mag 7 stocks have not been participating. If you look at like Microsoft, it's just barely holding on to this huge support zone between 400 and 410. It's by no means in the midst of any sort of a breakout to all-time highs. If you look at Amazon has not been trading well since its earnings report. This was building out a beautifully bullish looking pattern here. Earnings report came out, it broke through some support levels, and then just yesterday it broke through some further support levels. Stock isn't looking terrible. Big picture, its uptrend is still intact, but small picture over the course of the month of February, it has not been trading well when you compare it to the Qs. Google is a very similar picture. I was loving this Google chart above $200. Earnings report comes out, it hasn't been trading well. It lost 187.50 support. It's holding below that support zone right now. Apple a little bit better ever since the Alibaba news came out. So that one's a bit of improvement there. I know we're going to talk about Tesla in a bit, so I won't jump into it, but I still personally don't think that this Tesla looks very good unless it can get back above 375, which is a support level that it lost. If it does that, it'll start looking better. There's another one. Qs are breaking out. This thing is $130 off of its all-time high and has been very weak so far for the calendar year of 2025, all things considered. The strength has been coming from QQQE over QQQ, which you almost never see that happen. I feel like for a couple of years now, it's been all about Mag 7 stocks are leading the market higher and nothing else participates. And now I'm looking at QQQE leading higher when you've got like Airbnb. I know it's pulling back a little bit, but trading really well ever since that earnings report, or Spotify holding this really good looking trend. I mean, look at, I don't know if this HIMS is actually in the NASDAQ or not. I don't think it is, but look at this HIMS move. So you're getting some moves in a lot of these like meme style, heavily shorted stocks that are oftentimes within the QQQE, when the QQQ, which is where a lot of people have their money parked, has not been, the QQQ is at highs, but the dispersion underneath the surface has meant that a lot of these Mag 7 stocks, which is where a lot of people have their money parked, just haven't been performing in the same way. But you brought up the AAII sentiment indicator thing there, and I've seen that as well. I was looking at this morning, and that seems to indicate that people are more bearish than bullish. There are other indicators out there that I've seen that are almost showing the exact opposite right now. I've seen some that are showing that like retail sentiment is pretty much at all-time highs. So I think that there is some mixed information just on sentiment and thought process overall for this market. But, you know, like you said, SPYs are breaking out through this potential huge resistance zone after a multi-month consolidation. So the technicals on the index level are starting to look pretty bullish here, as long as we don't fail back through those levels.
Okay, JR, what do you make of this market?
Hey, boys. See me later about the beard problem, Derek. There's an app for that.
Does HIMS make a pill or something?
just messing around. All right, so I mean the market looks wildly bullish to me. We're sitting through a lot of consolidation. The Nasdaq is in the process of building a handle to this cup, right? And so when you're building structure and you're in some kind of consolidation, it always feels choppy. You know, internals always look like, you know, your market technicals are always going to look like not so good, right? Like we're going higher on big down volume versus up volume. Your cumulative tick is negative. Your advanced declines look like, you know, share after Studio 54, you know, all night binge. You know what I'm saying? Like it's not a good hair day for the market, but you got to have respect for where you are in the price cycle, right? The market has multiple cycles: accumulation, distribution, consolidation, and we're right now we're building structure, right? Like Wyckoff would call this cause building, right? So what's bullish about this market is that you get constant, never-ending failure of the bears. The bears are the coyote in this market. You know, every other day, the bears are looking over the cliff and realize that there's no ground beneath them, and they fail consistently over and over again. The dip gets bought. The shorts fail consistently. Why? It's because this is an overall strong market that's in a bullish consolidation, about to make its next leg higher. That is just my technical opinion. Now, I was expecting more of a shakeout in the market. We still may get a little bit more of a shakeout in the market, but looking at these charts, what I see is seasonally strong, weaker, you know, technicals and internals that are also very, very much reflective of a, you know, structure building moment in the market where we're consolidating, absorbing overhead supply, and bringing in potentially new buyers into you know, new leg of the market. And to me, it just looks like that's what we're feeling at the moment. That being said, if you're a day trader, right, like a lot of swings are maybe failing a little bit, but if you're a day trader, okay, and you're looking at HIMS or SMCI or Tesla this morning, you know, we bought Tesla off the open and watched it rip higher on a daily buy set up to like 360, 650 or something. There's still a lot to do in this market, right? So I wouldn't let this whole, we're in consolidation station mode, idea keep you out of really good intraday trades. Our job is to find those opportunities. Look at Tesla this very second. You're in a two-wave corrective snapback, and you retraced 50% of the pullback already. That we called this out in the room like 6 minutes ago, and you're up 4 points.
Okay,
Call this snapback out right here. There's a lot to do in this market if you're a day trader.
Okay, JR, quickly, I remember you talking about a target of SPX 6300.
That's right.
Is that still intact?
I think so.
All right. Okay. All right. So let's talk about our good friend Tesla. Last week we had a little bit of a throwdown. Things got bloody. Things got very, very ugly in here. Sammy, you were the only short-term lover of Tesla, and still the worst Mag 7 name, but it seems to be coming back. So Sammy, are you still on the Tesla train?
I am. I actually, sorry, I dropped my phone. I actually had a call on it in the newsletter, and it's an open position, and I'll show you why I liked it and why I still like it. So here's my charts. And so, okay. So last week we talked about the Tesla, and I said it might actually be the bottom right here because it was it has accelerated a little bit. So down a lot, biggest red bar, right? That's when people finally get out. A spike in volume also that day. And then if you look at the weekly, chart right here, it's actually a weekly buy setup. So people usually get out when they should be getting in. Remember that, because you don't want to be what's that? Because you don't want to be the person that gets out when you should be getting in. Now, where should you be getting in? When you put a 20 period moving average on a trending stock, that's where you should actually be looking to get in. So most of the time, people actually get out when they should be getting in. So I noticed the sell-off, the wide range red bar right here, the spike in volume. I actually didn't get it. I was hoping for one more gap down day so we can buy it off the novice gap down. We didn't get it. We got a gap up. And so I'm like, darn, I missed it basically. I missed the bottom, but I looked at the hourly chart. Let's see if I can bring up the hourly chart, hourly time frame real quick. So here it is. And this is what I called in the newsletter as a long. On the hourly chart, at the end of the day, on the first up day in Tesla, we had a massive sell-off right here. You see it? This is from 345 to 335 or so to close the day like so. So this is a sell setup. That's a downtrend, lower highs, lower lows, right? That's a sell setup. That's called a sell setup. So in the newsletter, it closed like this. I said long Tesla over this pivot right here, stop under the red bar. And this is called a sell setup failure, SSF. And that's precisely what happened. So we're in Tesla from here, stop under the red bar. And basically, I'm counting on Tesla being the bottom. So we'll see. I like it higher, and I like the larger time frames mostly, and hopefully, eventually will work out. So still bullish on Tesla for sure.
Okay, Derek, last week you had some very unkind words to say about Tesla and Elon Musk. I was personally offended. What's the story now? Has anything changed?
Were you more or less offended by my comments compared to when he did that half fake Nazi salute that he did? Anyway, so I totally agree with the kind of bottom call there. And I think all three of us actually called this thing long on the same day. I think that the result of the trade, though, is something that is where the opinion differs. Loved this as a long into that extension on, what was this, February 12th. Great trade. My target on that trade was the area between 365 and 375. That's basically where we got to today. So we're just kind of getting into my area here, which is my target on the long. I think that even if you are thinking this could be an absolute bottom and looking for a full-on reversal in this thing, it might be prudent to book a little bit of your long profit into this area as it kind of gets back into these moving averages and it tests a previous level that it lost. So this 375 was a huge support zone. First, the stock actually broke out through 360 back in early December. So that's a notable level. Had a great kind of parabolic move that we then took as a short setup. It worked really, really well for the move back to 400, which is my target on that trade. And then since that point, it started to establish a support zone really between like 375 and 380. So the concept of previous support becoming future resistance is what I'm looking at here in conjunction with just relative weakness overall in the stock. So I put on a little bit of a call credit spread this morning. So a little bit of a bearish bet on that initially. I haven't put on any outright stock. So I will, if this kind of continues higher, probably closer to that 375 zone is what I'm thinking for now. On the very short term, this is a great long call for today also, with this kind of inside and up setup off of this little consolidation that it had with a lot of strength. I think some of that strength is probably coming from the news that was out on Twitter this morning about him being able to raise capital at the same valuation that he bought the stock out at just a couple of years ago. But I still don't like it. I don't like it technically. And while the market is objectively bullish from a technical analysis perspective, there's still some things under the surface that make me a little bit nervous, that make me think that this is a higher probability of being a market breakout failure at a certain point. Now, I certainly don't advocate blindly shorting a market as it's actually breaking out, but I've been telling my team to be perhaps more prepared for a breakout failure than they would be typically. But overall, these market technicals look bullish. If you do get a breakout failure, this is an if-then statement, then Tesla is one of my absolute favorite shorts to put on in that sort of an environment. But always got to be careful actually fighting the indexes. So that's where we're at.
Okay, cool. Okay, JR, I know you played Tesla earlier today, but up here, is this gas station sushi or fancy tomahawk steak with garlic butter and all that stuff?
Bro, it's Tesla. It's always gas station sushi. What are you talking about? You treat Tesla. You don't know if you're the mark or what. What's up?
JR, I'm long the stock, so I need you to agree with me. We need you to say good things. I'm not here for the truth.
Look, last week we said it was a long. We all agreed. Today you triggered us. We call it an Evel Knievel when you have a climactic, weekly 21 shakeout bar and a buy setup. You get a lot of momentum to the upside, right? So we started long on the opening range breakout, and then I got heavy on the trigger of the weekly buy setup for a day trade. That's like easy money. And the problem with Tesla, right, is first of all, it's Tesla, but you have a lot of open interests overhead, like 377. You have a gamma wall at 400, right? It's not an easy ascent, if you know what I mean, technically. So, here's what I tell people about Tesla. Okay, the only thing I care about with Tesla is it moving? I don't care if she goes up or down. Is it moving in a technically sound, volatile pattern with lots of volume? If so, then, apply day trade. If not, just leave her alone. A lot of people get obsessed with Tesla, go back to the same watering hole every day, and, sometimes it's really just not in play, and people, expect the same results, which is almost the definition of day trading insanity. But today she's definitely in play.
All right, thank you. Okay, we need to give a shout out to our friend Billy Bob, who says this is a better show than The View. Now, I don't. Can
I be Whoopi Goldberg? I'm calling Whoopi Goldberg right now. Just putting it out there.
How could any show be better than The View? The View is like best thing to possibly watch on TV. Billy Bob, we appreciate the sentiment, though.
Gotta say, I've never actually seen that show. So.
Oh. You need to shut off your screens and put it on. It's amazing every single day. Okay,
all right. You have a beard deficiency, Derek. This is why you can't grow a manly beard.
The View, watching The View will increase your testosterone. It's been proven. Okay, all right. I want to sort of switch gears a little bit because we've been on Tesla. Now, One thing I've noticed over time is that like the valuations of growth stocks tend to get like crazier and crazier and crazier. Now, I remember it used to be normal for like growth stocks to be like 20, 25, 30 times earnings if they're getting crazy. Now they're like 100. And like, you know, we see this with Palantir, Snowflake, all these Datadog. There's a million of them. And I'll just throw it out to everybody. Does this stuff, does it even matter anymore? I don't know if it ever mattered, but like, should we just forget all about all that stuff and just look at the charts? Any of you guys want to jump in? Even anybody in the crowd?
I'll jump in. And I think JR talks about this a decent amount. It's the weighing machine versus the voting machine. What's your time frame? You got to know your time frame. Are you investing a retirement account that you want to be holding for the next 30 years? Or are you day trading something that you're going to be out of in the next 5 to 10 minutes? I think that in the short run, valuations don't matter at all. I've seen studies that show that valuations don't matter for as much as like a 10-year time frame. So your time frame has to be so long that you're thinking in excess of 10 years for valuations to matter. And then when you're having a 10-year plus time horizon, so many different things that can change for a company over the course of 10 years that will also entirely change the story. So we are primarily short-term traders. I day trade and I swing trade. I will hold positions for, a month plus in some instances. I'll have decently long holds, but even on those long holds, I very, very actively day trade around a core swing position while I'm waiting for the bigger picture to play out. And I'm looking at the technicals, not the valuation. Now, I do like to have an understanding of the company that I'm involved in, because I think it gives me a better understanding of, all right, is this company overvalued, but it's got a 40% short float and the float itself is 5 million shares, in which case it doesn't matter that it's overvalued and it can continue and continue and continue? Or is this a company that's super overvalued but has a different structure to it where it's going to struggle to continue at a certain point? So I like to pay attention to that information. I find that it helps me trade. But at the end of the day, it's the technicals that pay you. It's the technicals that enable you to measure risk and measure reward.
Okay, JR, Sammy, either of you guys want to chime in on this?
In agreement with Derek, I don't even bother looking at the fundamentals. I just look at the technicals, and the chart tells me all I need to know. If it's bullish or bearish, that's all I need to know, basically.
I mean, I like to know the fundamentals on a more personal note, because when Palantir is going to trade 300 times earnings at one point and give you a giant shooting star on the weekly right before the rats panic and all the retailer traders get absolutely sloshed. And I'm going to be in that short. There is a particular weird kind of day trading Schadenfreude, knowing you're trading an absolute piece of junk, and you're pounding it into the ground. Other than that, I don't think it matters.
Okay, I mean, I do think the individual numbers are tricky, because like I operate under like the Keith Richards theory, which is like if he's gone this far, don't count him out for the next year. So what's the difference between like 100 times earnings and 150 times earnings? I don't know. But anyway,
I'm in Palantir from $18. So like at this point, it's so outrageous, I'm just going to let it go.
Stock can remain irrational for longer than you can remain solvent. I mean, 100 times earnings, 300 times earnings, it's expensive at 100. It's more expensive at 300. So put your whole account in at 300 and hope it doesn't go to 500.
Yeah. My mentor used to say, the market can stay stupid a lot longer than you can stay stupid. So, who knows, man? This thing could tag $250 and keep going.
Okay. All right. So speaking of like, I don't know, doing stupid things, I have like $10 million in my account. I need to put it to work today. So I need ideas.
I got an idea for you.
I'll start. Sammy, I can tell.
No, I really don't have very many good ideas. I'm sharing my charts. Am I not? Let's see. Okay. I don't have very many good ideas, but I want to show you, I don't like the chart of Bitcoin the way it looks right now. I really don't. This is very, very sloppy. But if you think about it, Bitcoin has been basing at the highs for several months. If you look at the weekly chart, we have a wide range igniting bar and then a pullback inside of that bar. Do you think this is a good area to be a seller or a buyer of Bitcoin? I'll let you think about it. But is that a good area to be a buyer or a seller of Bitcoin? So that's an idea. Another idea would be to, I'm liking some of the real estate stocks. Redfin triggered for us in the newsletter today. I honestly don't love Redfin because it's like the weakest real estate stock. But we also have the comp as an earnings play, and it's on fire today. It's saving my day because the earnings plays today that I took weren't very good, and this is the one that's saving my day, and I'm keeping it long term because of the way it looks. This is Compass. This is another Zillow-like company. So I like it. I like Redfin, possible long-term play. I like Disney a lot. Now Disney got sloppy after earnings, but if you look at the monthly chart, look at that rounded bottom. So the longer it bases, the better it looks to me. The Disney. Then I have the SWKS as a long. Now this is similar to the play from last week on UPS, which I still hold long term. This was not a gap down. This was it went ex dividend. So this is a big gap down that looks higher to me if it can just take out the double top that it formed, basically. Similar to FMC also, which looks good, looks decent. These are more the FMC, the SWKS. Those are more like swing trades. The Redfin, the Disney, the Bitcoin, Ethereum also, ETHE, or I have the ETHU. So those are more longer term trades. Here's a swing, like a hybrid between a swing and a long-term trade, and it's the Flex. It's been really, really bullish, doing a buy setup on the daily chart. So I just like it over that red bar's high, which is 42.36. Long, stop under this little base, whatever you want to call it, pivot, and then I don't know, don't have a target for it. So these are just a few ideas that I have. A couple of them are longer term, a couple of them are short term, and that's it. There's not a ton that looks great at the moment, I think.
Okay, funny that you like Disney. I guess you haven't seen the new Captain America. Okay, well, we'll go on to you, Derek. Is there anything you're liking out there, loving, hating?
You got $10 million to invest, and you want to know what to do with it?
It's up to 10.2 million. I just made a little more.
10.2, not bad. So I mean, Treasury yield right now is what? The 10 years at 4.5%. My public.com retail account has given me 4.1% on my cash that I have sitting in there right now. So what is that, like $450,000 a year off your 10.2? I think that sounds okay.
It's not about the money. It's about the adventure and the glory.
Okay, I respect that. I think you should risk all $10 million on a Tesla short, and then we'll take it from there when you double your money. As a matter of fact, leverage it up. I know some brokerages where you could get portfolio margin on that, so you could probably short 60 million worth of Tesla into 375, and then we'll see what happens. So jokes aside, there's not a tremendous amount of setups out there that I like. This market's been a little bit weird with how well the SPYs and Qs are holding in compared to a lot of the stocks that I was referencing earlier. A lot of those Mag 7 names don't look good to me right now. So I was like joking, but I was half joking, where I think it makes sense to be a little bit defensive right now. And I think if we get a 10% plus dip in this market, you really want to be able to have some money available to you to put to work at that point, and have a list of stocks that you want to buy for that potential dip. I'd be watching this VIX. If you want to have some longs on, it might make sense to have some longer dated VIX calls. I think that the March 24 and 25 calls, there's been a lot of big money that have been buying those recently because vol is so cheap right now. So I don't hate the idea of having some longs right now combined with some safety, because if we get another event that causes a large gap down, I don't think it's going to get bought in the way that we got bought up at those events at the end of January and the beginning of February with DeepSeek, and then with the little tariff scare that we had. I just think that the market dynamics are changing as we get through expiration, which happened this morning, and OPEX, which is happening this coming week, which will therefore mean that over the course of the next couple months, major dips aren't going to be bought in the same way that they were. You still actually need a catalyst for that to happen, though. What that catalyst is, your guess is as good as mine. Could be debt selling related. It could be tariff related. It could be something that I don't see coming. But otherwise, the technicals look super bullish. So I like the idea of being long the indexes, long relative strength, long Apple, long Europe, long China. International markets are outperforming U.S. markets in 2025. I think that's going to continue to be that way. So park some money there, but also be ready for a larger dip to come to not only buy, but profit off of in the meantime.
Okay. All right. Thank you, Derek. JR, on to you, buddy, to close us out.
And you want to put it to work. I mean, honestly, we're about to go in a market where unless you go long a show horse and a Moldovan mistress, it's going to be very hard for you to lose money. You know what I'm saying? Just stay away from those two assets, and I think you're going to be fine. On my watch list, ALK, Alaska Airlines, triggering long today on the weekly. It's not an inside bar breakout technically, because you've got this what do you call this? The Dragonfly Doji. So I call this an outside bar reversal, whatever you want to call this. It's very bullish. Alaska Airlines, I'm looking for a move to the mid 90s. I like the airlines and travel stocks. PLMR, I've been waiting on this one. We need to build a bigger base. But I mean, look at this. Look at this since the IPO here. I'm looking for this to trend to 200. It's more of a long-term trending type of play. So I need a right side to build here on the weekly for a few more weeks. But I'm stalking this trade for a move to $200. CrowdStrike, software is hot. Cybersecurity is hot. I already nibbled a little CrowdStrike here. I'm going to look for the weekly inside bar breakout to take us to 500. So probably need another week or two. Fiserv, we took this one yesterday here off the weekly inside bar breakout at 232. We're up nicely. You're going to get a back-to-back inside bar breakouts here. And I'm looking for Fiserv. I know Fiserv looks a little overextended on the monthly here, but I'm looking for 250. We're already long, and I think you're going to get plenty of opportunities with this one on pullbacks. AT, this one has become a darling. You have an IPO-based breakout here. So, I think pullbacks at 29 are viable. I like this little doji here holding the gap on the weekly. I need a right side to build. I need a base to build here, and I'm looking for this one to double or triple in the next year. Pinterest, you got that post-earnings gap with falling wedge snapback waiting to happen. So I'm being patient, but I like it through 40.86 on the weekly. CLOV, the ideal would have been the monthly base breakout. I think, I don't know if Sammy was in this one, but it looks like a chart Sammy would have bought.
We were in it in the newsletter. You're right. You're 100% correct.
Yeah. So now I'm waiting for the weekly wedge to mature here and take us through $5. Take two. Never mind. This shouldn't be here. Palo Alto. I love this rounding bottom here on the weekly. I'm looking for a handle to build, give us a nice cup and handle, and a $30 measured move to 230, 240. ADP, another weekly rounding bottom, nice bounce off the 21. I'm looking for a move through 312. I like it for about $30 measured move. Expedia, back to the travel theme here. Nice post-earnings gap. And now we have a beautiful inside bar breakout on the weekly through 208.73. Starbucks, it just looks good on the weekly here, 113.39. You already had that declining tops line break on the monthly, and now I'm looking for a secondary move. It's going to be about $16 to $20 measured move to take us to 235, 234, something like that. BBY already triggered the buy setup off the monthly 21. Powerful little buy setup there. And now I'm stalking this one into next week for an inside bar breakout through 91.30. Looks pretty good. ICE, I've been, we called like 8 trades in ICE in the past 6 months. I literally missed every single one of them. And now I'm looking for, I don't like these topping tails very much, but if we get a strong outside bar reversal with volume through 169.87, I see about a $20 measured move there. Hilton, this base needs to mature. This needs 2 or 3 weeks, but it looks okay. RCL, another base that I think in a couple of weeks is going to give us a nice push higher through 275.73. There's something about the airlines, travel stocks, and cruise lines that looks like it's going to really go much higher. DoorDash, stalking this into next week for an inside bar breakout, 215.25. Tesla was on our watch list for this week already for the weekly buy setup. It looks great. APP, again, another, I think Sammy calls these 1, 2, 3s, 525.15. And Amazon, that shouldn't be there. FOUR had earnings, but we were watching for some continuation off this buy setup, and that's about it.
That was quite Sammy-esque. Sammy,
I know I pulled a Sammy today. I don't know what happened.
Sammy lost his title. This is shocking.
I have, for sure. I have.
Billy Bob called it. Sammy, this is really awkward because like Sammy and I have like
it happened by accident, guys. I'm sorry. I didn't mean to show Sammy up. Listen, when he takes out his list, I take notes. So just know that, Sammy.
Well, thank you.
Oh gosh, now this is gonna be awkward. If God,
very awkward.
I can't like dump Sammy in public for JR. That would just be wrong.
Oh
anyway,
my God.
folks, I'm sorry we got to end on an awkward note like this, but JR just broke the matrix. We don't know what to do.
I'm sorry I made things weird. I love you, Sammy.
All right. All right, everybody out there, give your Moldavian mistress a hug and have a wonderful, wonderful day.
Take